Natural gas, why so volatile? Natural gas volatility is cooling off at winter's end per usual, right? I ask that quite auspicious question because we'll see here that the options market might not be pricing a calm end to the winter and start of spring and summer. A lot of you might be asking, what the heck are you talking about? Already diving into seasonality with natural gas. You didn't even tell me why it's so volatile. Sorry to get ahead of myself. We will take apart this entire commodity landscape here, starting with the fact that natural gas is one of the most volatile major commodities at most traders' disposal, right there with crude oil, and sometimes gold can get quite volatile in the commodity space. Anybody who's traded agricultures like corn and soybeans and wheat, those markets can, gain or lose 50% of their value in a given year. Natural gas, though, tends to one up all of those markets. As you can see here, looking at the y-axis, the last year's worth of price action in natural gas will show you a market that has almost tripled from the start of 2022 and then has lost 80% of its value from its peak. That is a market that would project to have about 100% realized volatility at various points throughout this year. Why is it so volatile? Well, aside from natural gas being the center of a lot of supply and demand news stories, it is a singular commodity market here. You talk about the stock market and the S&P 500, NASDAQ, those are baskets of stocks. And you say, well, the bond market when I'm trading the 10-year or the 30-year, or the Forex market when I'm trading the euro against the dollar, or the pound against the dollar, or the euro against the yen. Those are singular markets, Frank. So why aren't those as volatile? Well, commodity spaces tend to be a lot more volatile because they're driven by just a few numbers there. I mean, in the treasury space, though the 10-year treasury note is a singular market, there are so many pieces of the economy that factor into every tick of movement in that market. In natural gas, a lot of people like commodity spaces because it's a potentially simpler story. You're just putting a magnifying glass on supply and demand. What are the inventories looking like, and what does it look like in natural gas in particular here? You could do a similar breakdown for, agriculture markets or crude oil energy markets, but what are the inventories of natural gas? And, how much of it are we going to need to heat buildings or run electricity or do these different things that this energy goes into? And though it can get complicated, of course, you can nuance anything to death. It is relatively a simpler game than the stock market at large or the foreign exchange market at large, and everything that goes into the exchange rate between the US dollar and euro. So you can see here that those simple dynamics that can change quite drastically can account for a very volatile market, as we've seen going into the start of 2022. Natural gas market that is around $3.50 gets all the way up to just barely gets up to $10 and then backs all the way off to $2.25. We got to earlier this week. Those were the lows here in the natural gas futures that we've been looking at for the last year and a half. Now, you got a little semblance of, okay, Frank, I understand why this thing is maybe more volatile than Apple stock or the S&P 500 or the 10-year treasury note. But you bring in this seasonal volatility piece on top of it. Why does natural gas tend to be more volatile in fall, winter, and less so in spring, summer? Well, I will hang up here the details confirming my assumption. You can see that the average volatility in June is 42%. The average volatility in December is 63%. Quite a jump there. If you're running those monthly volatility numbers for, say, the stock market or the foreign exchange market, any other market really that doesn't have seasonality, like I did here for the last decade, month-to-month differences are usually going to be 1 to 5 percentage points. Here, we have a 20 percentage point difference in volatility. And you can see it as well on the last 5 or so years of price action in this natural gas market, every jump occurring right around that year tick on the x-axis, which, of course, everybody knowing how calendars work, that is when we're looking at November to February. As the year turns over, you're seeing that price action really pick up to the up and downside here. And this is what seasonality looks like. Until this last year, which we'll get into here in a second, because some of you might be looking ahead at the price action to your rightmost on your screen and saying, hey, 2022 and 2023 look a lot different than these other years. A lot of volatility happening between the year ticks, conveying some summer seasonality. We will get to that in a second. But this is what seasonality looks like. Natural gas is usually one of the most obedient, I guess I would say, to seasonal volatility here. And it's just letting you know that if you're trading the market itself, or you're trading the options on this market, the futures or what have you, in the summertime, you might expect a smaller range to trade around or lower option premiums. And in the wintertime, you would expect vice versa, bigger ranges and larger premiums in the options market. But seasons seem to be changing a little bit here. I know that they didn't change the calendar, not that I know of, but it seems like the seasonally volatile time for natural gas has changed in the last 12 months, given the huge rally and then fall and then rally and then fall in prices occurring throughout this most recent summer into the fall. And if anything, we had a little bit of a quieter winter than we did summer and fall. And at first I thought, maybe we're just getting ahead of ourselves. Every year, it seems like maybe traders are just getting ahead of that seasonality. What was maybe 5-10 years ago, December, the heart of volatility in natural gas, now a couple of years ago has become November, and then last year it's October, and this year it's more August, and we're just getting ahead of ourselves. But after talking to my mentor and good friend, Pete Molmat, who's been trading around these markets much longer than I have, and is much more tapped in, he brought up the fact that natural gas is being used a lot more recently for electricity and other uses that are required not mainly, but in the summertime and in the spring. Whereas, and I guess I should backtrack just a little bit here. What was the primary use for natural gas, and why did it create this seasonal trading cycle? Well, it was to heat homes and large buildings and everything else. When do we primarily need heat here in the U.S.? That is going to be throughout the winter months. And so you would see volatility really climb, implied volatility climb, option prices all climb throughout October, November, December, January, Feb, and March. In March, it would start to dip off, because by March, we're through most of the winter and the forecasts are locked in. They have a pretty good semblance of how cold it's going to be for the rest of winter, whereas natural gas was really bouncing around in October, November, and December, because the forecasts are out there. But sometimes, oh, wow, it's a lot more cold than we thought. We're going to need more natural gas. Oh, whoa, it actually came in like this most recent winter, not as cold as expected. And natural gas got absolutely annihilated. But the seasonality actually starting to come out of natural gas. I mean, yes, we had a volatile winter, but what I thought was really interesting is not only did we have a volatile summer 2022, but checking the options markets, and thankfully I sit next to Pete Molmat because he reined me in before I started looking at short premium strategies in April, May, and June, because I saw these implied volatilities up above 100%, and I was like, man, those aren't the seasonally volatile months for natural gas. It looks like there might be some good edge in this market if implied volatility is so high, and we usually don't see that large of price action in natural gas in those months. But of course, Frank isn't smarter than the market. The market is priced efficiently here. I mean, we'll see if it ends up being a volatile summer for natural gas, but implied volatility being more than double historical volatility in these summer months might be too good to be true, because this commodity has become diversified in its use cases, and now is drawing a lot of news stories. I mean, here in the end of February, you might think natural gas news stories and price action coming to an end. And I foolishly thought the same. I was like, oh man, we got our volatility for natural gas, and the sell-off was quite crazy here, going back to this chart throughout the end of 2022, and then especially January and February. And we'll probably just sit around $2 to $3 for the next several months until October inevitably rolls around and we get the seasonality back in this market. Options not saying that, my good friend Pete not saying that, and of course the price action from 2022 spring through summer also not saying that. So this is all to say that all you natural gas heads out there, you have the whole year now to trade this thing, where it used to be anybody kind of scraping the bottom of the barrel with the March and April contracts in natural gas. We're really trying to get the last bits of volatility out of this market. Looks like they're really going to hang in with that peak being in May, 158% implied volatility. Just to go back to those numbers that I crunched here over the last decade, you're seeing first of all, a realized volatility in the seasonally volatile months of December and January in the 60% handle, and then down in the 40% handle in your summer months. So even in the seasonally volatile months, not getting historically as volatile as 100% volatility. And you have implied volatility for March and April north of 100%. And then, of course, in May, 158%. And then, funny enough, starting to dip lower as we edge out of summer into fall, when you would expect it to start picking up in, say, July, August, and then really heating up in October and November. So a lot of stuff still going on in this natural gas market. I know a lot of people already have positions on, but if you are looking at, say, the 150 puts and the 5 calls in natural gas and saying, holy smokes, there's a lot of premium in this market for these being summertime options expirations. Keep in mind that natural gas does not seem to any longer, at least, be just a winter trade. Getting, I guess, and this is an oxymoron, I guess, 2 seasonal periods throughout the year in natural gas, making it a well-rounded, volatile, all-the-time market, at least for the last year and the foreseeable future, as priced in by the options. So definitely keep that one on your radar. Don't take it off just because we are exiting winter here in natural gas.